here going into our afternoon. This morning, we had our CPI print, and it came back higher than expected. The CPI year over year was expected at 3.7%. It came back at 3.8%. And the big change here, this is just a quick refresh from the Fed Watch tool. And if you remember early this morning, there were no rate hikes that were being priced into the market. And we've been speculating about this since coming into these highs here on Friday, that we were going to be going into a PPI and CPI print here this week, and that the market could start pricing in rate hikes in the future if the perception of those inflation expectations were rising. And they are. There is now a rate hike being priced into April 28th of 2027, a rate hike. That is not priced into the market. Rate hikes are not priced into the market. So as we're looking at this from the perspective of the Fed Fund futures, the indices have gone from pushing rate cuts out into the future to now there being actual rate hikes being priced into next year. When we start to look at our leading indicators, it becomes very important to pay attention to this in terms of the VIX. And the VIX is inside of its series of short setups, but it did break through in the June contract a short from highs. This means that it's coming back into a long from lows. And that's going to be important to pay attention to in relation to the indices. Again, continuous contract pierces. The normal new June contract has not, but the continuous contract broke a 61.8% line and then is inside of its very first pullback after the trend break. And we often talk about the VIX is the best representation of a short idea inside of the broad markets. And why is that? The ES can be down by 2%, and the VIX will be up 6 to 8. So sometimes we'll see even a 10x times move inside of the VIX inverse to the indices. So this is going to be an incredibly important long to pay attention to. Its bullish above line in the sand is the 1919. So we round down to 15 and then we add a tick. So everything above 1910 is a bullish above line in the sand here as we're going into the second half of the day. Let's look at the bank chart. Bank is inside of a short setup as well too, and we're watching to see where it comes all the way halfway back short from highs to lows. The dollar is rallying away from a double bottom inside of this absolutely massive support level. But note that it does have room to fall back down into its support level. What would that do to the indices if the VIX is falling into support and the dollar is falling into support? Well, it would create a counter trend rally, wouldn't it? And so that's what we see inside of the broad markets as well too. We see the ES squeezing off of a gap fill, which we had from last week Friday. We also had this little bear trap down here as we were going into the beginning of the daily doldrums. And now we're squeezing up into a 50% short from highs to lows, inverse of those dollar support levels and those VIX support levels. So we'll see how high we get. There's a divergence right now between the ES. This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.